Hi everyone, my name is Michael Jedrak and I'm your worst nightmare. Once again, my name is Michael Jedrak and I am a DIY investor just like you are, and this is my channel, DIY Money. Whenever I drive, I think a lot and I have lots of things going on inside my head. And this is one of those times when I just needed to stop and I said, okay, I'm just not driving anymore. I made a slight detour to park here on a dirt road simply because I need to share some information with you. And today we'll be talking about the elephant in the room, about the smelly fart in the elevator, which is the war on Iran. I should rather call it an unnecessary attack against a country which has never been a danger for the US. I've got my notebook with me where I usually make some notes as I'm sitting somewhere and thinking. So this is my cheat sheet. And I will just try to, I don't know how to start actually, because there are so many things which have been going on over the last actually 2 weeks that it's a very complex situation, and trying to simplify it is really hard. It's not the best idea, but it's probably the only way to make it easy to digest for most of us money DIYers. Okay, I'm trying not to be too political here. I'm only trying to judge costs versus gains. And in my opinion, the key lesson for today is that somebody's stupid decisions far, far away from us can really have huge consequences at our doorstep. And with this war, it's a similar situation for most financial markets. If we are in the US, as I am right now, if we are in Europe, we are fully aware that that Iran is not a threat for us. They have enough problems in their own area, and they have enough enemies in their own backyard or front yard. They are really not interested in threatening Europe or the United States. If you were to look for any Iranian threats against the US, for example, do you remember any? Any terrorists from Iran and stuff like that trying to make a mess in the US? Probably not. I am absolutely sure that you have much more crime overnight in Detroit that you had Iranian threats over the last decade, probably. So for the US, there is actually no reasonable incentive to start this war. Okay, but whatever happened, happened. So first, let's discuss how things used to be before. And before the war on Iran, we had cheap oil, which means cheap gas, cheap diesel at the pumps, cheap propane, whatever, cheap plastics. Don't forget that oil is not just for our vehicles in the form of gasoline. Oil is also one of the most important components of all sorts of plastics, or at least most of them. So whatever you have that is made out of plastic, like this notepad or whatever, any part that has some plastic, your phone, your camera, your TV, this is also the result of humanity digging out crude oil from the earth. So we had cheap oil, we had cheap metal mining. This is important for investors because recently metals have been going up like crazy over the last 2 or 3 years. So silver mines, gold mines were a good way to invest money. And one of the biggest expenses in mining is diesel fuel, because all the heavy machinery, all the trucks, all the transport, all the machines that whatever dig out those rocks, the silver ore, they need fuel to operate. So we had cheap mining. In general, we had cheap transport, even in the beginning of 2026, because we had cheap gasoline. So your favorite yogurt, your favorite soda drink, your favorite bread, or whatever was being delivered at a lower cost. And we also had a really nice scenario until last week, when metals have been steadily going up over years. And in the case of gold, it's almost like a decade of growth, with the biggest explosion being 24, 25. And also the S&P 500 index has been going up all the time. But this is now a thing of the past. Since the attack on Iran started, we have expensive oil, which actually is not going to be the biggest problem yet, because we know it's going to be temporary. By temporary, I mean it might take a year, maybe 7 months. For things to normalize, it might take 3 years, but in the long run, it's a temporary problem. The biggest problem is that all the other countries in the Middle East cannot sell their biggest product, which is oil, because Iran is blocking the Hormuz Strait. So they are all stuck, basically. And this actually creates a domino effect. It's like a cascade effect. For example, let's assume that Saudi Arabia used to sell a lot of oil, which is true. Now, because of the blockade of the entire area, the tankers, all their ships are stuck. There is no export of oil. And you know that Saudi Arabia and all the other countries are like funky, futuristic, and whatnot, flashy places. And they basically have nothing else as their asset apart from oil and, for example, gold reserves. And what they need for sort of like daily operation, they need money. They need money to pay for their entire infrastructure to work. They need money to buy stuff, to pay companies, etc. Any government needs money to operate. Now that we have a blockade of the strait, they cannot sell their basically only product, which is oil. So they are actually running out of dollars. Most currencies in the area are probably pegged to the dollar anyway. So when there are no dollars, there's no other currency. So what they're doing, they are selling assets. Probably one of the biggest assets apart from oil in the Middle East is going to be gold reserves. And this is why the price of gold might be going down right now. We've had a huge crash last week, probably the biggest crash since over 40 years. And basically this is the scenario. They are running out of money, so they need to sell whatever they have available in their pockets, which is going to be gold. That's why precious metals are going down. There are many more reasons, but this is one of them. And also, that's why mining stocks are going down, because we've experienced a lot of volatility in the metal market. People don't know what's going on. So, and diesel is more expensive, so mines are going to have a hard year ahead of them. And this is why their stocks, I wouldn't call it they are plummeting, but there is like a significant downward trend in the mining stocks, which is bad for us investors. Or is it? Maybe if you're starting with mining stocks, this is your chance. And also an important thing is that dollar is too strong because there's so much turmoil on the market, and because the United States have assumed like a very aggressive position against Iran, the dollar has decided to go up. And whenever the dollar becomes expensive, there's an index called DXY, which is the index of the dollar. Whenever it's at 100 or more, this is not good for us. Whenever it's lower, it's better for us DIY money investors. And I'm going to tell you why in a moment if I don't forget about it. Another problem is that interest rates have not been cut. So that means that government debt is going to become more attractive for investors. And in a scenario where silver and gold are just going left and right, up and down, many institutions, we're not talking about your neighbor Johnny and your other neighbor Jennifer, we're talking about institutions that buy in bulk. So they are going to steer away, for example, from precious metals towards government debt, which seems like a little bit more stable and a little bit more attractive as of right now. Okay, so you have enough of a mess inside your head right now, and probably your main question is, what am I gonna do? Yeah. So first of all, I think this is temporary. I mean, everything is temporary. Even your life is temporary. You're gonna die in the future anyway. Yeah. Some might die pretty soon, like almost instantly in an accident, whatever, next year, next month. Sorry to say that. Some might die within 10 years, 20 years. The lucky ones are gonna make it 40 years more or more. So everything is temporary. So I think that if you have any stocks, I wouldn't just try to panic sell them. Yeah, this is usually what the street does. Yeah, somebody says, oh, I've made an investment in this or that company, they're going down, okay, let's sell it while we can. This is not a good approach. If you've lost already. So keep those stocks. They usually go up. Some go up after a year, some go up after 10 or 15 years, which is good for you. I had a few stocks which I sold 20 years ago because they were worth basically a couple dollars, and 20 years from that moment they are worth around 100 times more. Imagine keeping this $1,000 in those stocks, you would have $100,000 today. Never sell stocks. This is not advice, this is what I would do. Even if the company goes bankrupt, whatever, it's a lesson for you. It's a memory. It's something to talk about in the evening. This is not something that's going to change your life much more for the worse. If it goes, it goes. Don't worry about it. I will keep all the stocks that I already have. Simply because dips, in my opinion, are going to be temporary, and the entire market is going to go down a little bit, then it's going to rebound again. That's what I think. What I would do is, of course, I would just buy the dips. If you have any extra money, don't be afraid to buy silver or gold because they are dipping right now. The only thing I cannot predict, I had a crystal ball, but I just broke it like 10 days ago. So I'm not able to just give you any more information about the future because I don't have my crystal ball anymore. But my general assumption is that those companies those precious metals will dip as they are dipping, and they will recover sometime in the future. We don't know when. And another thing is we don't know how low they're going to go. because right now we are at a point, as of the end of March 2026, when gold and silver might stop going down, and if they stay a little while at this level, this is going to be a sign for investors that, okay, this is a time to to buy those precious metals, and this will create an upward trend. But if the dips keep going deeper and deeper, this might mean that for certain investors that, okay, something wrong is going on, and everybody's gonna be selling in panic. And when everybody runs to the door, things really go wrong. So those precious metals could really collapse really, really low. But I wouldn't worry about them anyway, because there are some technical reasons, some real life reasons, tangible reasons why those precious metals are going to go up, including silver, which used to be a precious metal only meant for those losers who cannot afford gold jewelry, and there was basically no other use for silver. We knew it was the best conductor of electricity, but nobody really cared. Now silver has found much more use in industrial areas, so it's become, sorry, there are lots of flies over here, so it's become one of the crucial minerals, strategic minerals for many countries, including the United States and of course China. But this is a totally different story, so I would not steer away from precious metals. I would try to buy the dip. The only thing we don't know is whether this dip is already the lowest point, or if it's going to go down a little bit more. But in that case, if you bought gold or silver, you just simply have to wait a little bit more until the dip goes all the way to the bottom and then rebounds back to your level, and of course above the price that you paid. And basically, as of today, there are not many more ideas that come to my mind except for concentrating on tangible items. So don't buy gold and silver futures, don't buy financial instruments which are leveraged. Try to buy the physical stuff. Try to buy things you can hide and put in your pocket. It's still too early to speculate how this entire mess is going to end, but I am, as of today, I'm slightly worried because everything is going down. But when I think deeper about it, I'm highly optimistic, because when a price of something is low, this is not a problem, this is an opportunity. So I hope you will think about it a little bit more, and I hope that you will make sure that this current situation is also an opportunity for you. That's all for today. See you next time. Don't forget to like and subscribe. Thank you and have a good day.